All right, so it's 10 a.m. We have a quorum present. We'll start with the Pledge of Allegiance led by Mr. Chapa, and then Leo will do the board mission statement.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Honor the Texas flag. I pledge allegiance to thee, Texas, one state under God, one and indivisible.
All right, board mission statement. Through high expectation and equitable opportunity, TMISD will focus on the whole child by providing a safe environment and high-quality curriculum with diverse and enriching experiences.
Leo, any public comments? Are we go here?
Yeah, public hearing.
Okay, public hearing, 2025-2026 budget.
Before Philip gets started, I just want to thank the board for taking time out of your busy schedule to meet with us. It's very, very much appreciated. Thank you.
Of course.
We gotta get it done so we can spend money, right?
Yes.
People are waiting for their money.
And you're gonna feel like deja vu because you've heard 99.9% of this before, but we have to do it to jump through all the hoops and cross all the T's and dot all the I's so we can adopt our budget. Historical enrollment, see where we are, we've been pretty fast. And then our property values, you see the separation that we used to have when we had M&G and they got their tax break, not M&G, CC Polymers now. Now we only have one value now because they no longer have their tax exemption. And we're still looking at, we're right under 4 billion, about 3.9 billion. Here's what our tax rates are proposed to meet our budget needs. The Tier 1 tax rate, which is the compressed tax rate that's set by the state, stays at 61.92. Because we did the TRE back in 2010, we have golden and copper pennies, which the voters approved back then, so that increases our tax rate, our minimum tax rate to 7.575. That doesn't change this year, but we'll talk about the debt service later, but you'll see the INS rates going to go up to cover our debt payments because we're starting to borrow money for the new bond program. So the total tax rate will be a little over $1.05. Okay, I haven't figured out why this slide doesn't work, but the graphic doesn't show, but there's the total tax rate. You can see how it's been compressed back since 1617 when it was $1.40. Here's the effect on the average residence. This is from the appraisal district, and using our proposed tax rates on the average residence with the new homestead exemption, the additional $40,000. It reduces the average taxpayer a little over $87, but that's completely average. In the general fund, our factors, no change in the tax rate. We're using, I have to estimate the current certified values from the comptroller, but I'm using historical trends to do that. And once again, we won't find that out until this time next year, how we settle up with the state. Like right now, I'm finding out, we just found out that the comptroller values are, the preliminary comptroller values for last year are becoming the final values. So a year from now, we'll find out if the certified values I'm using here will accurately reflect what we're going to get. Estimated AD, the same as 24-25, which is slowly creeping back up, and I use 98% collection rate. And then, once again, the tax collections do impact us now, so we want to make sure that we collect all our taxes. That will, if we don't collect taxes, it also means that we lose money from the state, which sounds ridiculous. And then the only risk, like I said, is that the state comptroller certified values at this time next year won't be in line with what the appraisal district says. Revenue factors, big changes from House Bill 2. An additional, we're estimating to get an additional, over over $1 million for the regional insurance allotment to offset our property insurance. The basic cost allotment, almost $400,000 estimated additional revenue. The big one, teacher retention allotment, $4,000 for 3- and 4-year teachers and $8,000 for teachers with 5 or more years of experience, estimated almost $1.8 million. And then they gave us a small amount for increasing pay for all the other people in the district that are not teachers. That was only a little over $140,000 estimated. And then we do have some decreases because our values did drop a little bit. I'm lowering property tax revenue a little bit because of that decrease. Investment earnings, we lowered it because I don't have as much cash to invest. Rates are still pretty good, but we just have a little bit less cash in the bank. And I just adjusted the 313 payment a little bit. That's based on our ADA, and we're only going to get that for 2 more years, and then the 313 agreement will be done with CC Polymer. State revenues, here's where big increase, which includes the retention allotment and all those things that I mentioned, a little over $4.2 million increase. The recapture, I'm projecting it to go down a little bit, about 40,000. We're still going to roughly fall below right 10,000. And then the TRS is going to go up a little bit because of the increased salaries. The TRS is going to go up, but this cost is not a true cost to us. There's an expense that matches it. That's just an accounting entry. That doesn't affect the bottom line. Federal revenues, Max SHARS continues to decline, so I've reduced those revenues a little over $100,000. And then when we looked at the program budgets, campus, local budgets, like I said, the process we did this year was I determined what our positions were, what we wanted to do for raises. We calculated that first, and then whenever we were short, we went back and looked and see where we could trim and to get a balanced budget. So we went back to the campuses and decreased their local budget 7%. That was a total. This is across all 5 campuses, a little over $42,000. Debt service went down because we paid off a maintenance tax note that we no longer have to make a payment on, and we did reduce our costs when we redid the copier printing program. And then overall, we went back to the departments. Those cost cuts range from 4 to 7%, and the reason some of the departments were a little less than 7% was because some of those have fixed costs, like the electricity, utilities. That budget is spot on. That I can't cut that. We have a utility expense of about $1 million. I can't cut that. And then there's fixed costs in my budget. There's fixed costs in budgets that can't be cut. But overall, we cut a little over $100,000 from all the other campus departments. That means maintenance, transportation, finance, y'all's budget, everybody's budget got cut a little bit.
And I was just gonna ask, like, when you were saying that y'all did some changes, like on all campuses that y'all cut their budget, like, or the programs, what programs were you talking
Every
about?
campus gets a local allocation based upon their enrollment. And so we just reduced the per capita, like they get X amount of dollars per kid. And high school gets more per kid because they've got way more programs. And then it goes down a little bit. Primary and intermediate have a little bit less of a per student rate. We just lowered that rate a little bit. But that covers, that's their local budget. They can decide where they want to put that money. They can put it in staff development. They can put it in special programs that they do. You know, this doesn't count. This doesn't include all the special programs. It doesn't include GT, bilingual, state comp. It's basically what the principals control, and they allocate money to the counselors, they allocate money to the nurse, they allocate money to their budget to run their office, their principal's office, and then that's the majority of the instructional supplies that are for the campus, for all the core subjects, and some of the extracurricular, the band, the choir, the drill team. They have their budgets too. That's 100% local, what they control. And it's based upon a per student per capita, and we lowered that a little bit, so their allocation went down a little bit.
So all the programs got some sort of a budget cut?
Some sort of cut, yes. Now, then those special ones I told you about, GT, state comp, early education, all those other ones, they weren't cut maybe as much, but they all were cut some percentage.
What about the special education programs? Did they get a budget cut?
They probably got the smallest cut of all,
Smallest cut,
because
okay.
we've got required expenses. They have some fixed costs that I can't reduce them, because we know we have these fixed costs, and we know we're gonna have these evaluations and the other things. But one good thing, we are getting some more money from the state to cover some of the special ed evaluation costs that we have to pay when a parent requests an evaluation.
I just don't want for, like, to be honest, I mean, I'm gonna be a voice for these kids. We need to make sure that they don't get their budgets cut too much, because
Sure.
they do need a lot of extra help, you know, for our
I will give an
kiddos.
example. Special ed is, they're in the same category, well, there's a lot of things that are in this category, but we always talk about maintenance. If something breaks that, could affect the safety, or, we need electricity, there's certain things, we have to have. If something breaks, we're gonna fix it, and, and if it's big, and if we have to go into fund balance to pay for it, that's what we're gonna pay for. There are required costs for special education. If we have required costs for special education, and we need to increase the budget later, I need to come back to you later and say, we've got increased special ed costs, we're gonna have to do it. In other words, we're legally bound for those costs, and so if we have to incur them, then we'll figure out a way to cover them. So, special ed is one thing that we cannot not do what we're required to do for special ed.
Okay, so what about like also like non-requirements, because special ed has, they have their Special Olympics as well. We want to make sure that we have it in the budget for them to have their uniforms, just like all the other
I've had
programs do.
I've had discussions with Ms. Booker. We figured out a way to, we've come up with a plan. It involved kind of also asking for some help from outside entities. But our plan is to provide new uniforms every year for Special Olympics.
Okay,
Let me
We have
tell
a
you
plan for
where,
that.
and I think this will make you feel a little easier. Many times, the campus budgets are spent, not 100%, but a lot on morale, polo shirts, lunches, that type of teacher appreciation type things. Those things will be hit first.
But with that being said, because they are important too,
They are important.
when we start to get healthier,
Thank you.
right, budgetly, I would like to see money going back
Absolutely.
to all of those groups.
Absolutely.
So, and we're headed in that direction, so.
I believe so.
But we're not going to allow services to kids to be cut.
okay.
And definitely, I stress, if there's any expenditure that has anything to do with student safety or with anything like that, because I do not want to hear someone say, well, I didn't take care of it because Mr. Carroll cut my budget, or because, I tell the principals all the time, I tell the departments all the time, it's like, yes, we have to tighten our belts and we have to watch what we spend, but if there's something that comes up that you feel, especially if it impacts student safety or anything, the operation of the building, or, so we can conduct instruction safely and the way we need to, you have to speak up, and we will figure out a way to take care of it. So, don't be silent. It doesn't hurt to ask. And I don't always say no, especially if it involves safety, or if it's something important or very critical. Good things, starting pay, teacher salary, 0-year teachers, 54.5, 2.5% increase. And you can see the increases that we did for step 1 and 2, which weren't funded by the state. And then the 4,000 to 8,000 that was funded by the state. So average increase, double digits, over 12%. There's some teachers that are getting 14, 15% increases, depending on what step they're on. And then the goal was also to work and go across the board, give every division of employee a raise. And so we went with 5% of the pay grade midpoint for all our clerical and paraprofessional staff. And then maintenance and transportation, we did 3% of their pay grade plus 50 cents. And the range of all that is minimum 5% to 7.3% increase across the board for all those categories of employees. And then looking at if you kind of put it all together, certified staff, that includes teachers, but that also includes all the people that aren't teachers, admin, and all the other staff, diags, all the other special ed staff, and all the other people that we have that have what we call certified positions, but they're not teachers, almost 1.4. Clerical and para, maintenance and transportation increases, and then stipends, like I said, they went down a little bit because we rolled them, we took a lot of people that we took off the teacher pay scale, we rolled their stipends into their salary. So nobody lost it, no one lost any money. We just reallocated the salaries and included it in their salary. We reallocated the stipends and included it in their salary. And this total, it looks a little low, but it's almost $1.6 million. But remember, this is also comparing to last year's base budget. So there's a lot, it's a little bit of an apple to orange. We gotta remember, I go back and start at the base budget and build it back up to what we need to.
Philip, I have a question.
Yes, sir.
So if you roll back to the general fund, the factors, HB2 funding, for the earmark for teacher retention and support staff totals just shy of 1.9 million.
Right.
And this is, you said 1.6, so it's about $300,000 different. Is that money that we get from the state, is that exclusively earmarked for payroll?
Well, technically, whenever we get a word from the state, I know there's gonna be some factor. I'm gonna have to prove to them that we did, however many teachers we report in October, there's gonna be some mechanism, because this has happened before. When they've given us money for teachers, we have to prove to them that whatever we did report as teachers and how much money that calculates that they gave us, I gotta prove to them that we did turn around and give that as salaries. What's really helping us, remember, we were 2.5 in the negative.
Right.
And so we've raised expenses, but now we've gotten more money. What's really helping us out is that regional insurance allotment, that million we got for that.
Sure.
And then the other increases in the per capita rate and those other increases, that's what's enabled us to come up and be at least on sea level with a balanced budget.
Right, I'm just concerned that we've got those funds rolled into this state money of 13 million, right?
Yes,
Okay,
yes.
so is that, we don't want to, if they're telling us that's for payroll.
Yes.
We don't want to include that to offset other expenditures.
Correct,
That's
correct.
kind of buffering
Correct.
that
No,
zero
I
base.
I've fully budgeted for what our teachers are and what our positions are. So the expense side is going to cover everything and
Okay, so we're matching.
we're
Okay,
covered.
okay.
It was close to about 900,000 we had to match, if I can remember from. Also, what's really helping is the personnel cuts that we've made over the last couple of years.
Right.
That's significant.
That was a great question, though.
And then to summarize the general fund, our total revenues, our total expenditures, we have a balanced budget. But like I said, if you look at, we're still majority locally funded by taxpayers, almost 70%, and only 30% of our general fund comes from the state.
Most of the districts I've worked at have been opposite of that. They've been very property poor, and the majority of their budget, and that's where our recapture comes in. If it helps a little bit, we're helping our neighbors throughout the state.
And so, once again, I'm optimistic that the 24-25 year that's ending basically today, because the 31st is on Sunday, when the dust settles, the initial $2.5 million deficit that we budgeted for, I did luck out. I got an extra $1.4 million from the state that I wasn't counting on. I take no credit for that, but thank God that came in this year, so that helped wipe out almost half of it. But then with the cuts that we've made and the belt trimming, but we're not gonna not pay for something that we're required to pay for. But I'm very optimistic that when you see the audit, that we will not be taking, I can't promise that it's gonna be zero, but it is not gonna be 2.5 million. We're not gonna take $2.5 million out of the budget.
Well, you're also selling yourself short. We wouldn't have gotten the 1.4 million if you wouldn't have asked for an audit of that school year.
Right.
So Philip does that a lot. Philip is responsible for that 1.4 million.
Did you hit?
Great job.
So if you look at what we're say our expenditures are next year. If we maintain it, we'll have 2.3 months of operating expense. Once again, you know, we talked about this. There is no legal requirement. We do not have a board policy that mandates what our fund balance has to be. The general rule is you have 3 months of operating expense. We are trending back up, and that is also one of my long-term goals, is to always get that number back up above 3 months.
We are going to take a hit, though, from when we were having $3.5 million deficits and 2.5 on first. So that's
Yes.
coming up in a couple of months. We're not going to be an A. Looks like we're going to be a C because it lags. It's not current, but then you'll start seeing it go back up to where it should be.
Then the debt service fund, we talked about that. Our total outstanding debt principal at the end of this year is a little over $153 million, because we've already done 2 bond sales for the current bond program that we're in. Our scheduled principal and interest payments, a little over $11 million for next year. So we're increasing the INS tax rate to just under 30 cents to cover those payments. We do have a really healthy fund balance in our debt service fund. I estimate the fund balance, I mean, there's a number missing there, that should say 25, almost $3.5 million. I use the same collection rate, 98% to budget for this fund. And if you look at that, I do get some investment income. That's what the other local sources is, the $200,000. I do get a little bit of money from the state, because we get held harmless every time they increase the homestead exemption. That affects the INS collections too, so we get a little bit of money from the state. They pay us back a little bit of money to take into account those additional homestead exemptions. But I'm still showing a surplus for next year, so we'll maintain that fund balance at a little over $3.7 million. The food service fund, that's the other legally adopted fund that you're going to propose that you adopt today. This one we're keeping the same. Everybody eats for free. We do get reimbursed for a certain percentage of the eligible meals that we serve, but we do have a healthy fund balance, and TDA wants us to spend it down. I am showing a deficit budget again, but that's because we are required to spend this fund balance down, and we are working to make sure the kitchens, we replace equipment. We do, because we can only spend this money on food service things. We can't spend it on anything else. But we are required to spend that fund balance down. And so the fund balance right now, I'm estimating it's going to be a little bit over $3 million. That's over 10 months of operating expense. TDA does not like that. We got to spend that money.
And so is that 2.9 including the $600,000 deficit, or is that?
No, this is just what I'm predicting the fund balance is going to be at the end, like today, at the end of this fiscal year. So if you take it out, it'll drop it back down, probably to less than 2.9 if we truly spend this money down like we need to.
How long do we have to spend it down?
Well, they want you to do it within a year, and of course, I argue with them. It's like, well, it's almost, I'm not going to spend money just to spend money. I don't think if the kitchens need something, we make sure that they have it. They do tell you you're supposed to do it within a year, but it is logistically impossible for me to spend $2 million in a year. I mean, there's just no need for it. But every year I have to justify to them that we're planning on it, we're working on it. Yes, sir.
Can money be spent for air conditioning in the cafeteria? So slowly, I mean, just in the cafeteria?
Only anytime you do any kind of capital improvement, you have to get it pre-approved, and you have to, they will not, unless we could prove that we had a unit that only air conditioned the kitchen, because even the commons, anything we do in the commons, I can't 100% charge to the food service fund, because they know that we use that area for other things. It's not just used for the cafeteria. Right. For instance, when we renovated those bathrooms around the corner from the commons, I was able to charge a percentage of that, but I had to come up with this school schedule, and like, well, how many hours a day is the commons used for food service? and only that percentage can I charge for renovating those bathrooms. Because we said those are the bathrooms that the kids use when they're eating lunch or if they're there for breakfast. So they're very, very particular about capital outlay, and you've got to be able to prove that 100% of what you're spending is only for really the kitchen part, where they prepare the meals. It has to be for that area. If you do anything outside, it's only a percentage, and you have to what's the right word? We happily argue with them about. I state my case. It's like, well, it should be this, and then they come back and go, no, you can only do this. So I try to get as much, but dealing with TDA is very, very exhaustive and tedious.
This may sound like a dumb question, but I seriously am wondering. Why do they want you to spend a certain amount of money within a certain amount of time that you have to?
Well,
I don't understand.
The basic rule about this is we have the free and reduced lunch program. And so we've decided we went on CEP, which means every kid eats for free. We were eligible, before it wasn't really cost effective for us to do that before because we're property wealthy and our EcoDis numbers, they were about 60% district-wide, but it wasn't economically feasible for us to do that. But after Hurricane Harvey, all the districts in this region, we were eligible to do that. So we did it and it's in a 4-year cycle to be on CEP. So we elected to do that. And so what that in effect did is it allowed us to build up our fund balance because even though every kid was eating for free, every reimbursable meal that we were selling, we were getting reimbursed for that 100%. So what they don't want you to do, you're not supposed to be making money off the federal government. And so then they came in with these rules. They've always had these rules that said you cannot build up your fund balance from your federal income, and you're required to have. If you do charge, you're required to make sure that you're charging the same amount as what you're getting reimbursed from the feds if you give a free meal to an eligible student. So that's why their rule is you can't build up your fund balance off the federal government. But in effect, that's what happened with Hurricane Harvey, and we were on CEP for 4 years. But then Mr. Van Metre came here and said, well, since we built up a fund balance, we can afford to keep feeding everybody for free and try to spend that money down, even though that we're still on CEP, even though it's technically not economically feasible, because that's what I can tell you. In the future, in the long-term future, once we spend this fund balance down, we may not be able to offer free lunch to everybody, universal free lunch to everybody, because we'll be in danger of the fund balance having to be supplemented by the general fund, which a lot of districts that their food service fund loses money every year, and the general fund has to make the fund come back into the black because they lose money because they're not able to sustain the fund economically, keep it balanced. So in the future, we may not be able to sustain CEP, but for now, we've got the fund balance and we can do that. But TDA does not allow that expenditure. When I do the report to say, well, I'm going to spend the fund balance down, I'm not allowed to say that, well, I'm going to lose money because I'm still letting everybody eat for free. That's not an eligible deduction to prove that I'm going to spend the fund balance down. But that's one way we are trying to spend the fund balance down. They're saying it's not right to make money off the federal government. That's why.
Okay. Thank you.
Too bad we can't add a coffee bar.
I know.
And then just some truth in taxation regulations. The MCR, that's the maximum compressed rate. That's what the state says we have to do. And then we have local option tax rates. That's the golden and the copper penalties because we passed the TRE back in 2010. So we get to add to what the state says we have to compress to. So that's our voter-approved tax rate. But then I have to do this calculation called the no new revenue tax rate, which the comptroller requires us to do. But since we are completely regulated by the state, how we calculate our tax rate, it's kind of this, to me, it's this futile exercise that we have to do. But I have to go through that. I still have to fill out that paperwork with the tax assessor collector's office to show that we are following what the state comptroller wants us to do, even though TA and the state controls what our tax rate is. And then voter approved tax rate, currently, it only affects the INS tax rate. We are allowed to set our tax rate for our INS fund to cover the voter approved debt that we have. And then if we wanted to increase our MNO tax rate, we'd have to have, now they call it a VATE, or a voter approved tax ratification election. And then, but it's not advantageous for us to do that at this time. And then we're not doing any more. We have defeased debt in the past, but you can increase your INS tax rate if you decide to do a defeasance. But we're not electing to defease or pay off some of our INS debt early for next year. And then talking about the no new tax rate calculation, it's a uniform calculation. All Texas taxing entities have to do. It does, like I said, it does not consider that public school districts in Texas have other tax rate requirements, but I still have to fill it out. Since technically we are adopting an M&O tax rate that is less than the no new revenue tax rate for the comptroller's thing, then we're good. But even if our M&O tax rate was higher than what the comptroller says it is, we still can approve our tax rate what the TA says. We just have to put different language in there. But this year we don't have to put the different language because our tax rate tax rate that we're proposing is less than what the comptroller says our no new tax rate calculation is. Any questions? Like I said, I know y'all have seen this before, and I appreciate y'all going through all this information for these last 2 months. The budget process is always I don't use the word difficult, but it is a strenuous process. And thanks for paying attention and helping us out.
Thank you all for doing what you've been doing.
Thank you,
It's
Philip.
definitely a challenge.
It is, takes a team, and y'all did a great job.
Okay, we're 2 minutes over, so it only go 15 minutes.
All right, next item is adjournment.
It was my fault. I asked the question.
No,
Sorry.
but those are good questions though, because there's a lot of history behind the food service thing.
Okay. All right, so the next item here is a special call board meeting, right? That's where we're at next. And still no public comment?
No public comment.
Okay. So first action item here is discuss and consider approval of the 2024-2025 budget amendments.
Mr. Carroll?
Yes, normally at the end, when we adopt the budget, that's also my time to double check and make sure, project how the year's gonna finish. And once again, I'm hoping that when the dust settles, we will not have a significant deficit budget for the 24-25 year. But I have to look at various functions because y'all adopt the budget, especially expenditures by function. And so I try to project, we have a biweekly payroll today, and then we have another biweekly payroll in 2 weeks, which actually covers the last 2 weeks of work for August that's gonna get charged back to this year. So I project that. I have to project what the TRS, a lot of the TRS expense doesn't get calculated till the end of the month. And then there's various things that have happened during the year. I've been able to cover it, but this is what, these amendments are just to cover. I just examined, there was a few functions that I realized we were gonna be a little bit short on. Function 34, which is transportation. Function 36, which is extracurricular. And the good thing about that is, I predict we're gonna be short on that because we have so many kids go beyond district in athletics and in academics to cover that cost. So I'm worried that function 36 might not be covered. And then it's always I always try to keep the budget, the JJAP. We have to purchase 2 chairs from JJAP every year. And that figure, that expenditure is in a budget all by itself. So I just need a little bit more money to cover that for the year. And so all I've done here is put a little bit of money in the functions that I want to cover to make sure that I'm covered for the audit. But there is no increase in the bottom line. Whatever I increased on the expenditure side for a function, I've either reduced another expenditure or reduced revenue and actually recognized some of the salary savings that we're going to experience this year. So everything nets out to zero. This is just to increase a few functions, give me a little bit more breathing room in some of the functions that I was worried that I might fall short once all the audit entries are done.
Any questions?
Mr. President, members of the board, it is the administration's recommendation that the board approve the budget amendments as presented.
All right, do we have a motion?
I move that we approve the budget amendments.
Sorry, y'all.
No worries. Leo second. All those in favor? Carries 5-0. All right, next item here is discuss and consider authorization for superintendent, deputy superintendent to make end-of-year budget amendment adjustments not to exceed $35,000 to close out the 2024-2025 budget.
And then this, just to kind of extend from the year-end budget amendments you just approved, this is kind of just like an insurance policy, giving me a little bit more leeway that when the dust does settle, if another function happens to go over a little bit, I've capped it at 35,000, you're just giving me pre-approval. The auditors are okay with this. You're giving me pre-approval because we cannot adopt any budget change after August 31st. So this is just like a little insurance thing, give me a little bit of cushion in case I need to correct another function. And as always, if I do exercise this option, I will come back to you either at the September or the October meeting, and I will show you that, hey, I had to increase this budget by this much, and I'll show it to you just like I would a regular amendment. It would just, you wouldn't have to approve it, it would just be information to you to show that I did have to exercise the authority that I'm asking for today.
All right. Any questions?
Mr. President, members of the board, it is the administration's recommendation that the Board of Trustees approve the authorization for the end-of-year budget amendments as presented.
Motion that the Board of Trustees approve the authorization for end-of-year budget amendments as presented.
Okay, second,
I'll
Mr.
second
Chapa. All those in favor? 5-0. All right, the next one here is discuss and consider the adoption of legally required budgets, general fund, debt service, and food service by major revenue and function category for 2025-2026.
Mr. Carroll?
All the discussions, all the meetings that we have, it all boils down to one single sheet of paper as presented that shows the three funds. Once you adopt this, then to change those categories, that requires a budget amendment for next year. So this is the last step, and we have to approve the budget before we can set the tax rate. Any questions?
Any questions?
And normally you do them both. You do the budget and then the next agenda item's tax rate, but we're going to do the tax rate on the 15th.
Okay.
Mr. President, members of the board, it is the administration's recommendation to adopt the proposed Tolosa Midway ISD 2025-2026 legally adopted budgets by major revenue and expenditure function category for the general fund, debt service fund, and food service fund as presented in the designated attachment.
Have a motion?
I
Leo?
make a motion to adopt the proposed budget for 2025-2026.
All right.
I'll second that.
Give a second. All those in favor? Carries 5-0. All right, the next one here we have is discuss and consider approval of consent agenda informational items, July 2025 financials.
And yes, I was able to, I did give you a copy of the July financials. I didn't have them ready for the regular board meeting, but I did, they're there for you. You can see as of through July, if you take out encumbrances, we're only at 85% of the expenditures, so that's where I'm telling you that I'm virtually assured that we will not take $2.5 million out of fund balance. And then I have every intention at the September meeting, I will give you a preliminary August financials. It won't be final because the audit won't be final by then, but I'll give you preliminary August financials next month. And then, of course, when the audit's done, that's when that'll be the final financial status of the district once the audit's done.
The percentages are so much help when you're looking at like the budget. It's
Yes,
greatly appreciated.
yes.
So you're anticipating roughly about $150,000 to $200,000 deficit, Philip?
For the general fund?
Well, I mean, because you said that your anticipated fund balance is gonna be 8.3 million, right?
Right.
So if you kind of just take the numbers that we have, 2.6.
Right, because if you look on the first page, this has encumbrances in it, but yeah, the 2.6 turned into $1 million because that's with some of the savings that I've recognized, and then that's also because of the 1.4 that we got because of the tax value audit. And I'm anticipating that $1 million deficit will get significantly reduced.
Any questions?
Mr. President, members of the board, it is the administration's recommendation that the board approve the consent agenda as presented.
A motion?
I'll make a motion.
I'll second that.
Chapman second. All those in favor? Carries 5-0. All right, next item is future meetings, September 15th, 2025, regular board meeting. And that leads us to the next adjournment. Do we have a motion to adjourn?
I make a motion that we adjourn this meeting.
I'll second that.
Mr. Chapman seconds. All those in favor? 5-0. Thank you, everyone.
Awesome job.
Thanks so much for coming here at 10 o'clock.
Thanks for all you do, Philip.
It's kind of
Yes.
historic, we'll never be able to have a meeting at 10 o'clock again after September 1.
Why is that?
Because the new requirements are, board meetings have to be during non-working hours. So I don't know, starting September 1st. So,
We could all take a vacation day and have it.
Have fun, man.
Yes, sir. Thank you, everyone.